Hello guys, welcome to all, I hope you are well. How do we make the right purchase for you today? Where is the right place to buy? I will try to explain these, friends. First of all, let me say that the places we call the right place of purchase are a relative concept. Just as support and resistance is relative to everyone. So it's different for everyone. Support for whom, resistance for whom? These vary from person to person. This is also a relative concept, so I can say it's the right place for me. It may be a different place for you. Maybe a different trader's purchase may be from a different level. First of all, I will tell you about a buying place that I use, which is correct for me. Then how do we open a trade with it? How do we enter a trade? What should we pay attention to when trading? I will try to explain these and also show you an indicator. With this indicator, let's not call it an indicator, let's say a moving average. We will determine the direction of the trend with the moving average. We will actually support those with each other. Thank you in advance for listening to me. As I always say, nothing I explain in this training video is in the nature of investment advice. Do not take these as investment advice, you can get big losses, friends. Now, with your permission, I move on to our training video. I will show you today's trades on the Heikin Ashi chart. Why I will show you on the Heikin Ashi chart, friends, because as you know, Heikin Ashi allows us to draw straighter and better lines. By taking the average of the opening and closing of the candles, it adds a new candle to the chart and becomes the chart where we can better determine the trends. That's why we use Heikin Ashi. As I said, maybe many of the people who follow me do not enter the trade, thinking that the chart they have drawn is wrong because they throw the candlestick charts here, that is, the normal opening and closing candlesticks, out of proportion. In other words, most of us can't trust the graphics that we make and draw ourselves. That's why I'm going to show you through Heikin Ashi. We usually use Heikin Ashi to determine the trend direction anyway. That's why I set the chart to 5 minutes and set the candles as Heikin Ashi, not the normal candlestick chart. And as you can see, it has become a smoother graphic. I see the descending trend more easily. I see the rising trend more easily and I can read the candles more easily, my friends. As you can see here. What are we doing now? In order to find the right place, we first need a trend. If we are going to trade in a 5-minute period, it is more difficult for us to find a trend in a 5-minute period. Because let me tell you, since it will add a candle every 5 minutes, the trend will be more likely to be more accurate. In my opinion, you can plot this in a 15-minute time frame, or you can plot it in 1-hour time frame. I usually draw on 1-hour time frame because it adds a candle per hour. So maybe it takes a day for that trend to get there. It takes 1 day for me, it gives me more opportunity to trade in that parity, that cryptocurrency, that stock during the day, and it doesn't tire me out. But if I draw a trend in a 5-minute period, I have to constantly draw trends. This forces me. First of all, I open my chart as an hourly time frame as I said, and I need to draw a trend on an hourly chart. When we look at here first, we don't need to go far behind the chart as we will do a scalping or intraday trading. When we open the graph, we need to find what we see in front of us. When we look now, we can see that there is a falling trend here. The price is falling, and as you can see here, it has lit the green candles. Afterwards, there was already an upward trend, the price increased. But I have no business here. I'm going to take a falling trend. For this I draw a trend line from here and I start drawing the trend line from the first top here, friends. From here, and what am I doing? I'm touching the top here like this. And as you can see, I have drawn a falling trend. When we look now, I have included the end point of this place and here. And if it's worth it here, I'll have included here, anyway. When it touches here and rises above it, it will automatically break the downtrend and will now be the harbinger of a new uptrend. Now I've drawn the downtrend in 1 hour time frame, and let's evaluate this as the possibility of automatic price reversal. So we can predict that the price will come up to here and return from here. It has already fallen, tried this place once, failed to close on it and fell again. There is a high probability that this will come here again, so this is how we evaluate, friends. I am now in the trading period. I drew on 1 hour time frame. Whether the period is 15 minutes, 5 minutes, 3 minutes or 1 minute is up to you. I move from the 1 hour period to the lower periods and open my chart. As you can see, I am opening the 5-minute period. When I open the 5-minute period, you see the falling trend I drew it here. The price touched here once, could not close above it, fell down again. The price is now here, and the target price is here. So automatically my target price is here. Now when we get the percentage of the ratio. Let's start from the beginning. It makes an average of 2% profit up to the first line, so I place the sell order at the target price with a profit rate of 2%. But there is nothing that I will sell here, I am showing it for trading purposes. Now I need to know where the price is. Now I draw a Fibonacci from the trend zone I have drawn. We drew it according to 1 hour time frame, but even if we draw it on 1 hour time frame, it will show us its status in a 5-minute period. What I'm doing is I start pulling Fibonacci from here, I take it from the top and I pull it down, all the way to the bottom area. After pulling up to the bottom area, friends, I'm leaving it right here. As you can see, I took it from the bottom area and I'm drawing a horizontal line here. We assume that my horizontal line is exactly above the 23 region. As I always say, the closures above the 23 region are the bottom return closures for us. See, this place has already become a resistance in the Fibonacci automatically. That is, it corresponds to the point where the downtrend we have just calculated is broken, and in fact the downtrend we have drawn confirms us. So we can see that the graph we drew is correct. In fact, let's draw another one upwards. Let's see our next steps more clearly. Now after drawing them, it's okay. I see it was the 23 zone, this is the bottom zone. Did the price close above the 23 zone? Look, it has closed on the 23 zone. Where will the price automatically target? It will in here, as you can see. Well, we need to check how the support we drew on this 23 region worked before. It worked here as a very good support, then it worked here, and as you can see, it generally received a reaction from here and gave us good profit rates here. Again, the resistance worked very well. Let's go back a little bit more. As you can see, they have worked very well here. And look, when we go backwards, it worked very nicely as a resistance. It tried here once on January 16th, then tried again. Tried here again, then tried again here. I'm talking for the 5-minute period, and here it finally broke and here came a nice uptrend. Now logically zone 23 is the right zone for me. Because I looked back, and when we look back, it worked as a very good support and resistance and showed me my direction. When we look at it now, it has already closed above the 23 region. And the 38 zone in the automatically drawn Fibonacci support resistance levels is already working as a resistance zone, and when we look at the distance between it and here, we can say 1.9%, that is 2%. It has a distance of 2% from the current price. This could be my outlet. As I said, stop loss order can be here. So under the 23 zone we have drawn, I will stop my loss. Why do I put stop loss order? I always say, the bottom of the 23 region is always a cliff, friends. Do not trade based on that, never be afraid to stop out. Stop loss order will make you lose, but it will cause you a reasonable loss. You will lose a lot less than the amount you have, which is the financial market. There is no guarantee of anything here. If your odds are above 51%, if you have a 51% chance of winning, you already win. If you have a 49% or 51% chance of losing, you'll lose anyway, that's how it is. When we look now, we have drawn our falling trend. We drew our support resistance lines. Can I now qualify this place as the right buying zone for me? Yes, I can describe it. Because we confirmed, and when the price stayed above the 23 zone, it worked as both support resistance and also worked very well as a buying zone. For example, the price touched here as well and got a reaction from here, the price increased, and as you can see, it remained above it in the same way. The price has fallen, it has risen again and is trying to continue above it, which is not necessarily the case here. Price stops here, falls from here. We only consider possibilities. Now, as I said at the beginning of the first video, I will show you two moving averages. These moving averages only work with Heikin Ashi and will be short-term based moving average. With these, you need to determine the direction of the trend. These will help you determine the trend direction. So you drew the trend, you looked at the chart. Let's confirm this with a moving average, because in scalping transactions, constantly moving averages are used, friends, we get support from them. We write this as EMA in the indicators section and click on the EMA 2 times. It says exponential moving average. When you click on it 2 times, 2 EMAs will appear on the screen. After that, we will edit the input settings. Remember, you're going to set the first one's input to 8. Let's make it white, let's thicken it. We will set the other's input to 5. Now a question may come to your mind, sir, they are both short moving averages. How do they intersect with each other, you might say? In a normal price chart, that is, a normal candlestick chart, it is very difficult for us to intersect them. But for Heikin Ashi, this works very easily, friends. I also set it to 5, set its length to 5, and intersect 8 with 5. This helps us a lot to find the trend directions of Heikin Ashi, friends, so we will get support from this. Now, when we enlarge our graph a little bit, let's see, look, friends, there is an intersection in this area. In other words, it started an uptrend and the price came from here to here and gave a sell signal here again. So the price touched the support zone. Downward intersection. The 5-day moving average has crossed the 8-day moving average to the downside. It intersects upwards again here at this candle, then we see that the price is rising. When we look at it now, we see that the price has crossed downwards again. So I always say, do not trade in the middle sections. As I said before, prices can change here as well. You can consider these as buying zones. Always consider the support zones as buying zones, friends. Let's go back a little further and check. Look, we can see how prices rise when the 5-day moving average crosses the 8-day moving average upwards. Here it is giving a sell signal again. Even using these two, you can actually create a buy and sell strategy for yourself because it works both ways. Look, we can see that it works very well in the fall. Where is the intersection in decline? It intersects on that hill. After crossing from this hill, look at the fall over there, friends. It carried here. It took it from there, so let's go back a little more. Let's look at the bullish zones. There is an upside intersection here. Here the moving averages intersect on the upside and the price has gone up here, again working very well. Now the figure intersects downwards. It intersects in the sense of a short position. We also see that it reacts and falls very nicely, and then it crosses upwards again. Here, we can see that the prices rise very nicely when it crosses upwards again. So our goal here is these guys. Price broke the resistance from here. For example, the ranges are open in the moving average. We can foresee that the price will continue upwards. Here, it closed above the resistance, and when the price crosses downwards again, the price closes between the moving averages. Look at the gap distance here and the gap distance here. In other words, the moving average shows us that it will intersect and the price will decrease. The logic of the moving average is to follow the price movements and act according to the price movements, friends. In other words, the topic I told you today was all about the questions of how we determine the right purchase place for ourselves and how we do it. I tried to show this. I hope it was useful for you. That's all I'm going to tell you in this training video. I hope you like it, guys. As I said, nothing I explained in the training video is in the nature of investment advice. Do not perceive these as investment advice, you can get big losses. See you in the next training video. Bye, good luck.